stockmentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. It's time to do another update video. You'll have to excuse me, been quite a while. So I have not updated my lines. So the lines that you see on the screen, for all intents and purposes, just ignore. I'll have to spend some time this weekend going in and readjusting those after this weekend. All right, so where are we? What have we been seeing? Obviously, it's been a bit bearish the last few days. And overall, since we hit this upper area, we've been in a slow bleed to the downside. So for the last week, 2 weeks, it's been, obviously this up and down type of motion. Today, we finally started to get some extra pressure put on by the bears. We had been fitting beautifully with the bull flag formation, where we had been touching this and touching this and touching this, and there's an upper line that goes with this here, holding price very well. And now, after today's session, a lot of this has been now broken. So the formation of a bull flag, in my book, kind of gone. Not really looking at that anymore. And we're headed more towards, I'd say a little bit more bearish in my bias, at least for the next few days. You can see we are stuck in and around these 20, 50 daily moving averages. But after we had held the 200-day for a number of tries, we finally broke that today. Decent volume, nothing special. Don't expect it in December. Okay, it'll be very hard to gauge market direction, market sentiment, those type of things based off of volume over the next few weeks, just because as we roll into Christmas, things start to get pretty slow, and things get pretty tired. No one wants to make a really big move before the end of the year, and so you'll usually start to see this dissipate quite a bit coming into the last couple weeks of the year and through December. In the meantime, we are in the middle of options expiration week. It is quadruple witching on Friday, which, just for those of you that don't know, basically means a whole bunch of stuff expires all at the same time. And so overall, that could add, and it usually does add, a lot of extra volatility to the market. I really believe that if the market's going to move and move big, it's going to do it this week. I don't know if I expect too much of it over, like I said, the last 2 weeks of the year, which starts kind of next week. So I think most of the bigger moves should happen here in the next couple days. We'll be expecting bigger volatility, major volatility to kind of creep its way into the markets as it typically does. Overall, what have we got? Well, I'll tell you what. Let's look at it from both sides. I'm very big about being very neutral in my outlook on the markets. So some people prefer, and what it usually comes down to is confirmation bias. If someone is bearish in a position, they want to find somebody that's nothing but bearish in their analysis. I'm not built that way. The charts just are what they are, and we just are where we are within that particular move. So I don't get all wrapped up in, hey, I'm bearish, hey, I'm bullish, and this is why I'm bearish type thing. Here's what we're looking at. So let's look at both sides, because it really can be built here. Number one, the bull side. All right. This does look like it could be setting up for a beautiful inverse head and shoulders pattern. Left shoulder, head, right shoulder, even down into the 11.6. We could go to 11.5, and it really wouldn't damage this whole inverse head and shoulders look that we've got working on the chart in front of us. With that, the target is, I don't know, we had probably another 1,000 points above that. So there we're kind of reaching up into the high. A lot of people, if you're an Elliott wave type person, would be thinking that there's going to be a huge move to come. It really depends on what Elliott wave count you're working off of. One's major bearish, one's major bullish. So it kind of depends on where you're at. It really doesn't matter. The point of the fact is, okay, if we get back above this 12,250, 12,300 mark, the direction's up. Now, is it going to be a major bearish later on or major bullish? I don't care. I really don't care. It's going to go up. Okay, so your mark really, guys, above 12.2, above 12.3, that's where you're looking on the Dow to get long. The bearish move here is that we're starting a major move downwards here. That, I think, would be confirmed if we could somehow smash through this 11.2 mark. Definitely confirmed if we break down here. Okay, so these are your two really, really major areas to be watching very closely in the markets here over the next, I'd say, few months. probably take a little while to really wear this out. I'd be surprised if over the next few weeks we actually got one of the this area broken anyway. So anyway, back into these moving averages here on the Dow and holding very nicely after we broke the 200. You have the levels I'm looking at. We are just caught in a really, really big base, 11.6 to 12.3, 11.2 to 12.2, whatever, however you want to view this. The point is, we can go back a few months and we really haven't moved a whole lot in any of the markets. We're stuck in this sideways grind as the markets prepare for whatever that next major move is going to be. From the NASDAQ perspective, we were straight up and now we pulled back. There is a bull flag here. But once we broke 2260, 2250, it was bombs away here today. Okay, nice, strong move to the downside, down 1.5%, and in here to close a gap. So a very, very nice move by the NASDAQ. Still could be just some sort of pullback before a bigger move upwards. I'm always more bullish coming into Christmas because it's Christmas. People get the holiday spirit. They get amped about earnings coming out. They get juiced about technology stocks and things like that. So usually people are a little bit more bullish coming into the holidays. I am still expecting that type of action. It's just a matter of when. Does not have to happen this week. Can happen sometime next week or the following week. But I do expect some sort of a push up in the markets as we come into the Christmas season. Only from the standpoint, guys, not necessarily from a charting standpoint, but from a standpoint of history. Historically, we do rise into Christmas. It isn't true of every December, but most Decembers we do see that kind of action. Right now, though, after having broke some of these lower levels and getting back below these moving averages, I got to tell you, the bear side looks really, really good right now. So 2250, 2220 to 2225 is where we came into today. Breaks below that, we could get every bit as low as 2150-ish. That is a long ways down there. It's another 75 points. But certainly not out of the realm of possibility. From the weekly here, also consolidating sideways. Let me just point out again, go back a year. We haven't gone anywhere. For you long-term investors, you've got to be just, especially if you're doing anything based off of the indices, you've got to be just frustrated with what you've seen. There's nothing going on here. It is very, very frustrating. It's just stuck in a big range, 2150 to 2400. Basically 2150, 2450, 300 point range here on the NDX. Can't seem to break out of it. Still waiting for that bigger push. For the week, though, notice that we are back below not only the 50 but the 20 week moving averages. We were up above them 2 weeks in a row. The bears took it all back so far. Now the end of the week is not here, so it'll be curious to see where these close, but keep your eye on these coming into Friday's close. SPX 60 minute also in that bull flag. Look at that beautiful pullback. It was the first one to break. We started to get a break here a day or two ago where we busted this 1230 area, pushed it back up, and then today just completely, it just couldn't do it again. I think this is like 3 days ago. Anyway, point being, back below 1230 took us right back into the 1210 area. So a nice 20-point move. I'm not so sure we're done. It really does look like we've got some more bearish move ahead of us. Maybe we wake up to a gap tomorrow. Certainly wouldn't surprise me in the least bit. But things still do look more on the bearish side down here, especially after having broke that 1230 yet again. Just a beautiful bull flag was forming. None of it has played out on any of the indices. They've all just kind of started to move their way down. So, as it stands right now, below 1210 into 1200, 1190 and 1200 are big lower support areas for me. I'll be very curious to see what happens to the market when we get down into the when and if we get into these areas. So 1200, 1190, have them marked on your charts. Those are going to be big areas of lower support. From a daily perspective too, breaking below 2050 today, closing below. Volume wasn't spectacular, but not expected to be in December. Just still looks very bearish in through here. A slow grind downwards. I'm going to tell you what I've been telling my subscribers, okay? Take note of this too. Don't get too bullish, okay? Quit trying to call a bottom. This is the fastest way to blow up your account. Is you keep trying to call a bottom and you're wrong, and you add and you're wrong, and you add and you're wrong, and before long you bleed yourself to death. If you want to try to call a bottom, that's fine, but get in, put a tight stop in, and if it hits your stop, let it get you out. Don't change it. Don't change your mind or say, "Ah, it'll be all right." Don't, just get out. Try again at another time. Okay? You don't want to get caught in the grind downwards. If this happens to be some big move down, it could grind and grind and grind its way downwards for days on end. Go back, I don't have it in this chart, but go back a few months and you'll see that we had a start to a major drop in the markets. And it started just like this, slow and easy. Oh, just a pullback. Well, that's a little deeper than a pullback. Okay, it's still okay. We're just about to bounce. And then all of a sudden, you wake up one day and wham, we're down 50, 60, 70 points. Don't be that person. Don't get caught trying to call a bottom. Just be very careful. If this starts a major push to the upside, guys, you have got all kinds of time to get in and make all kinds of money. Okay? Just don't push it. We're going to have to clear this 1270, 1280 area for me to start really getting bullish on this market again. Okay, so as it is right now with the breaks of these moving averages, if the bulls can't take this back tomorrow, I got to stay with the bears for the time being. They're looking good down here. Everything's looking good. The VIX also kind of in a pullback, still elevated in the 26. You know, I prefer it below 20. Nothing really much to talk about. We're down, it was up, perfect. That's exactly what you want to see. VIX weekly, same type of thing. It looks like it's in a major pullback right here. I really don't start to get interested in the VIX until it gets below this 20 mark. That shows me a lot of complacency within the markets. And if we have some sort of a Christmas bump, a Christmas push, I would really expect the VIX to get back into this 20-ish area when and if that does actually happen. FAS 60-minute. All right, this looks like a big pullback right here, but as it is, I don't know if the pullback's done. The grind is great in through here. It really looks good. We start to break this 56 area, and I am totally targeting 53. That's a nice $3 move on FAS. So back below 56, look at 53. I'm not interested in this until we clear all this crap up here. So above 63, okay? Below 56 to 53 or above 63 on FAS. Daily looks the exact same way to me. Back above 63, back below 56, back to 53. Okay? These are really the marks to watch. Overall, you want to draw lines. It's a huge symmetrical triangle. Indecision as we wander our way sideways here. So, still good potential to the downside, especially from a symmetrical triangle standpoint. The 50, 53 marks, definitely doable. But overall, just a big consolidation to the sideways as the financials try to figure out what's going on. Here I like this above the 44 mark into the 45. We break above this 45, 45, 50 area. I really like 50. I think it's very possible. 48 to 50 would be my overhead target for you guys on any hard push to the upside. As it is right now, you know what, guys? It is what it is, and that is more of a bear flag. It really is more bearish here. So I'm struggling. The markets look more bearish. The financials look more bullish. I'm really struggling on which direction to take these things here. Okay. Overall, though, it is just a chop. It's just a sideways consolidation chop. So I always default to the indices. I gotta be more bearish on the markets and bearish for sure on the financials. So in the bigger picture, I'm really watching FAZ to the long side. When the financials go down, FAZ goes up. So I'm really interested in this to the long side right now. But still, as FAS, of course, trapped in a symmetrical triangle. Back above this 50 right here, about the 46 mark, I do like it back once again into the $50 mark. Nothing's different here from a daily or from a 60-minute. You can take any one of those entries. How far you'll be able to play it is unknown at this point. Major breaks, we get up into the 57 area. Oh man, it could be game on for the bulls. They could really have a nice run here in FAZ. But you start with the smaller trade first, and that's back above about 44. That's called 46 or so. Back above 44 for the more aggressive, back above 46 for the more conservative. That's going to be where your trades are at. Okay, that wraps it up for this video. Um, I just, after today's action, needed to do a video for everybody. I'm actually, unless we see a major change tomorrow, and it needs to kind of happen tomorrow, I'm going to have to remain a little bit more bearish on these markets. If we can grind our way downwards tomorrow, then maybe we see a nice bounce on Friday, but I don't know if it's going to be much. I don't know if it's going to make that much of a difference to the markets overall, just because we see a little bit of a bounce on Friday. Anyway, that's where I'm at with it right now. That's what I'll be looking at for the next few days. So um, put these put these levels that I gave you on your charts. Don't put these lines on your charts. They're all dead now. I need to redo all the lines. So please do not copy these lines. Next time I do a video, I'll make sure that the correct lines are in there. You guys can copy those if you'd like to. But as it is right now, don't worry about these lines. Pay attention to the levels I gave you for both long and short entries. Try to make a little bit of money out of this market as we proceed forward. Once again, if you like the videos, find them useful, I do one every single day except for Saturday. Subscriber newsletter, 28 bucks a month, buck a day. Don't entitle you to stick around for months and months and months at a time. You can try it out, see what you think. I have a mentoring program if you're interested in doing something more full time with your trading, or you just can't seem to get on the right side of the trade, or you just can't seem to figure out what stocks to choose, or which ones to stay away from, or what setups are good, and how do I find those setups, and how do I draw trend lines, and all the stuff that goes into trading from a theory standpoint. That the mentoring is for you. Then that is right up your alley. Let me know about that, and I'll keep you informed of that. And outside of that, guys, until we see you again, be careful with your trading. Keep your stops in place.